All right, let's dive into the EV sector because a really fascinating technical situation is brewing with one of its most watched stocks, NIO. The chart is showing this rare moment of just perfect balance, and that could be setting the stage for a seriously explosive move.
And this phrase right here, it absolutely nails what's happening. All of this tension, all of this energy is getting squeezed into a super tight range. And when that happens, a big move is usually just around the corner.
And that right there is the million-dollar question for every single trader and investor watching this stock right now. To figure that out, we really need to understand the forces at play here. So first up, the coiled spring. Let's unpack why the market is in this state of complete and total indecision. What are the clues on the chart telling us about this standoff between the buyers and the sellers? Well, the biggest clue from the last trading day is something called a Doji candle, and this is the textbook sign of indecision. It just means the stock opened and closed at almost the exact same price, bouncing around in this tiny little range between 498 and 503. I mean, it basically fought all day long and ended up right back where it started, a perfect stalemate. But here's the thing, price is only half the story. The real clue is the volume. Think back to those big down days earlier in the month. We saw massive selling, over 90 million shares changing hands. Now look at the volume on this day of indecision, just 24.6 million. I mean, that is a huge drop-off. So what does that tell us? Well, the classic technical read on this is that the sellers, who were just hammering the stock, they're getting tired. They might be running out of steam. They just don't have the same firepower to push the price down anymore, which suggests the path of least resistance, well, it might be shifting upwards. Okay, so if sellers are potentially exhausted, let's look at what the bulls are standing on. There are three key technical supports that are forming a really powerful argument for why the next big move could be up. First up, we've got the price floor. The stock did a great job defending the critical $4.85 level during that heavy selling on December 17th. For the bulls, holding this line in the sand is everything. It's the very thing keeping this whole bullish setup alive. And sitting right on top of that floor is our second pillar of support, the 200-day moving average, right at $4.86. Now, this isn't just some random line on a chart. This is considered the long-term trend indicator that the smart money, we're talking major institutional funds, they watch this like a hawk. The fact that the price is using this as a launch pad is a huge bullish signal.
And the third pillar? Well, the stock has plenty of fuel in the tank. The Relative Strength Index, or RSI, which is basically a momentum gauge, is sitting at a totally neutral 46.30. This means the stock is nowhere near being overbought. So there's no technical reason it can't just take off if buyers decide to step on the gas. So we've got a coiled spring sitting on a really solid foundation. Let's map out the first way this could go. Scenario A, the aggressive, high-reward Green Day breakout. Okay, for this plan, it has to be decisive. The trigger is a clean break and hold above that 503 resistance. And crucially, it must happen on big volume to prove it's the real deal and not a fake out. If that happens, the first target is that psychological 510 level, and after that, maybe a push to 519. For a fast play like this, risk management is everything, so you'd want a tight stop loss right below the VWAP, which is around $5. But hey, a good plan always accounts for both sides, right? What happens if the sellers have one more push left in them? Let's look at scenario B, the more patient red day dip buy strategy. So the trigger for this path is a break below that immediate support at 498. If that gives way, you should probably expect a quick flush down to retest that strong foundation we talked about. And this is where patience really pays off. Bulls would be watching that 485 to 486 area, the load-up zone, and just waiting for the signal, a successful bounce that proves the smart money is still defending that level. A successful bounce from that 485 support zone, yeah, that's what a lot of traders would call the ultimate buy-the-dip entry. Why? Because it would be a powerful confirmation that the long-term uptrend is safe and sound. Now, this is absolutely critical. Every strategy needs an emergency exit. If that key support zone fails and the stock actually breaks below $4.79, that is the absolute last line of defense. A move below that number would basically invalidate this entire bullish setup we've been talking about. Okay, we've gone through a lot of technical stuff here. So let's just boil this whole analysis down into a simple, actionable roadmap. Ultimately, it all comes down to this. The battle lines are drawn. For the bulls to take control and kick off scenario A, you need to watch for a confirmed break above 503.
On the flip side, if the sellers push back and trigger scenario B, the very first sign is going to be a confirmed break below 498. Those two prices, they're your signposts for whatever happens next.
So there you have it, the indecision, the strong foundation, and two very clear paths forward. The spring is coiled. Now that you have the roadmap, the only question left is, which way do you think it's about to launch?